Okay, so the S&P is recovering, trying to trigger a bottom sign. However, the situation is still very dangerous. There are many resistances on the index and it must break them all in order to materialize a true bounce to higher levels. So, what it takes for the index to truly react, and if it doesn't, how low could it get from here? Could this be an opportunity to buy? I mean, according to the legendary Nathan Rothschild, buy when there's blood in the streets. Is that correct? Well, maybe we'll see in this video. Speaking of Nathan, my name is Nathan and you are welcome to the Finance Hydra channel. First, yes, there are many resistances on the index right now. First, we did a downwards breakout from this descending channel. The channel was already descending. We were already in a bear trend. Since we lost this purple trend line down here connecting the previous bottom levels on the index, well, we are just crashing. We are just insanely bearish. And this purple trend line down here is supposed to work as a resistance level right now. And it is working as a resistance level right now at this moment today. Second, we have this black line at 38.85. Let me change this color to not confuse anyone. It is not a black line anymore, it is a red line over here. So we see this red line at 38.85. This key point over here was a previous support level on January 19, and it feels like the index is struggling at this area as well. But since we lost this support level, this key point is now supposed to work as a resistance level according to the principle of polarity in technical analysis, which states that previous support levels are going to work as future resistance levels and vice versa. So right now, what do we have here is a dual resistance level on the S&P. In order for it to truly bounce to higher levels, it must break this dual resistance level. And right now, it is not giving us any meaningful sign that it will break this key point. Only tomorrow, maybe if tomorrow we see a bullish continuation, if we break today's high, truly doing an upwards breakout from this dual resistance level over here, then okay, maybe we're going to see a true bounce. This means that the trend is going to reverse from bearish to bullish. No, not necessarily, because the trend is still bearish. The index is still doing lower highs, lower lows. As long as it keeps doing lower highs, lower lows, the trend will remain bearish. In order to reverse this bearish sentiment, the index must do higher highs, higher lows. Is there any higher high, higher low right now? No, so the trend is still bearish. If we take a look at the 1 hour chart, in the 1 hour chart, we just triggered a head and shoulders chart pattern. We did another lower high, lower low, and we are just crashing. There's not a single meaningful bullish reversal structure on the S&P in the short term yet. We see a previous bottom level at 39.49, which is supposed to work as a resistance level again in the future. So this key point might be a short-term resistance on the index if you look at the 1 hour chart. In addition to all these resistances in the daily chart over here, and we see this key point in the daily chart as well. The 39.49 was the neckline of a possible head and shoulders chart pattern as well, right? Maybe if you consider this as your shoulder, then yes, this is your neckline. If you consider this key point over here as your shoulder, then okay, the neckline is 38.85. Either way, we are below both necklines. So yes, the situation is not that easy for the index. In addition, we are below the 21 exponential moving average, which seems to be working as a resistance level right now for the index. So even if the index actually triggers a bounce by breaking this dual resistance level over here in the daily chart, in theory, it would bounce to the next resistance levels, which are first 39.49, second the 21 EMA, third and last one, this purple trend line over here, which is quite close to the 40.60 a previous key point on the index that did work as a resistance level when we did this fantastic hammer candlestick pattern just below this dual resistance level over here before the next crash. So, okay, we have multiple resistances. Even if the index reacts, it would have to break many lines over here in order to materialize a true reversal. And again, we have no bullish reversal structure yet because we only see lower highs, lower lows. Now let's take a look at the weekly chart. But before that, if you want to use a state-of-the-art trading approach with a solid track record, check our website, link in the description of this video. Join the top 5% family. Now back to the S&P over here. In the weekly chart, the situation could not be more critical because last week we did a fantastic, amazing hammer candlestick pattern just above this purple trend line over here, which was connecting the previous top levels on the index since January 2022, which is the ceiling of this descending channel over here in the weekly chart. And we broke this purple line over here. We did an upwards breakout, and then we corrected. We corrected to this purple trend line again, in addition to the 21 EMA in the weekly chart did a hammer candlestick pattern. And last week, thanks to many news, thanks to the Silicon Valley Bank, etc., we crashed, and right now we completely rejected this bullish structure. So far, there's not a single meaningful bullish structure on the index, but long-term speaking, we are just sideways. We are just neutral. At least the market is not in a bear market anymore. This is not a bear trend because we did a higher low and a slightly higher high over here a couple of weeks ago when we broke the 4100 this year. So, okay, the trend is quite neutral right now. But in order for the S&P resumes the bearish bias for real, it has to lose the next support level at 37.73 down here. We are very close to this support level, very close right now. In my humble opinion, we could easily seek this support level in the next couple of days or maybe in the next couple of weeks. If we lose 37.73, the market, this is going to give us the impression that the market is trying to do a double top chart pattern in this area, completely ignoring the idea of this descending channel right now. So if it actually triggers this double top, I believe we are going to materialize a way sharper correction that could take us to the next Fibonacci retracement at 61.8%, around 3,200. We hit the first retracement, the 38.2, we bounced it. We hit the 50% retracement, we bounced it. If we lose this key point again, well, it is going to resume the bearish momentum in the monthly chart, and here the S&P might trigger its next crash. So let's pay extra attention to these key points over here, to these resistances, to these support levels, because right now we are at a very important inflection point. Depending on how the S&P reacts over here, we might see a very good movement in the next couple of days. I'm gonna keep you guys updated on this channel, so if you're still not my subscriber, come on, subscribe this channel. You wouldn't be watching this random Brazilian guy talking about the S&P index over here for that long, so you liked the content, click on the like button as well to support me. Thank you very much for your audience, my dear friends. Stay safe. See you guys tomorrow.